Iron ore falls below $200 as China threatens to reduce their orders. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because once again we're going to talk about, well, the relationship between Australia and China and how iron ore is really, well, having an impact or an important part of that relationship. Now let's have a look. We'll start by looking at the current iron ore price and then a few things in the industry. We can see here right now it's at $197 USD a ton. Now, if we see this here, you've got to remember that our government set their budget for $50 a ton. It's not even on the chart here because this ends at 120. Let's zoom out. Let's go all data to get a picture of it. So the all data is only from 2009, but you can see there, you know, this is where the government set their budget at. So iron ore over the last few years has just skyrocketed. Now, the price of commodities, that does have an impact on, well, the revenue of a lot of the mining companies, the capex that they'll expend, the capital expenditure. You're watching a YouTuber here. You know, when we started our architectural practice, we did a lot of the architectural buildings on some of these coal mines. Daunia and Caval Ridge, all the mine industry area buildings there, we designed all of those and documented them. And, I mean, it helped me start my business. And what was interesting back then, around 2011-12, when coal, not iron, coal was quite high, you'd see all these proposals put forward for these really lavish, extravagant mines and accommodation just too extremes, like a luxury hotel for miners working out remote. You can't blame them wanting to provide little extras to keep their workers. But of course, you know, with prices changing, those designs get, well, let's see, a little cheaper. So this is the current price. Now, if we have a look here, this is the Observatory of Economic Complexity, and this is the data from Australia. And you can see iron ore is one of our biggest exports, $67.58 billion, everyone. It's a big chunk of our sector here. And what I'll bring up is just this infographic shows you how big the tourism sector is in Australia at $60.8 billion. So there you go. That's iron ore. And you've got petroleum, coal, briquettes at $51 billion, then gold, and a few others. But we are a natural resource exporting country. Biggest destination for all of our exports is China. When you look at our imports, you can see what's going on there. Okay, that's economic complexity. Anyway, you see our imports, most of them are coming from China, where our exports are heading there too. But the imports are more advanced, more sophisticated. This here is looking at our economic complexity here. This is the most complex products by PCI and most complex by the RCA index. You can see here wool, then iron ore, then coal, and here you have provitamins and vitamins, okay, and parts and accessories for optoelectrical equipment and therapeutics. Now you can see this is where the government wants to really ramp up our drug manufacturing industries here in Australia, but the money's in all of this. Look at the scale: 134 million compared to wool 2.26 billion, iron ore 67.5 billion. Okay, much bigger. Now, iron ore, its world trade is 124 billion in 2019. Its complexity is quite low. It's 926. Well, we have the Iron Age, guys. So people have been using iron for a while. We're the biggest exporter of iron ore in the world. We click on this. It should show us there you go. And that's where our iron ore is going. 81% to China. There you go. Number 2 is Brazil, and Brazil's capacity to export iron ore has been, well, affected by some dam and flooding disasters there, but still they're a huge exporter to China. They're number 2, everyone. We're right up there. Okay, so we need to keep that in mind when we're reading articles like this about all the doom and gloom and about the political rhetoric. You know, sure, they may be able to get more from Mongolia, they may be able to get more from Brazil, but we're close, we're convenient, and, you know, those things make a world of difference. Let me just bring up another chart that I have here. This is And once it loads up, this is the marine traffic, everyone. You can see just all the shipping flooding out of Australia, how much closer we are too than China. We've got good infrastructure, we've got good ports, so we do have a lot of competitive advantages. Now, one thing we also need to keep in mind when we're looking at this is, well, all of our iron ore, a lot of it's over here in Western Australia, everyone. There is a lot there. Western Australian government, if you look at their 2019-2020 revenue for the state government, 24% of that's from iron ore. So just keep that in mind. Iron ore is a real important part of our economy, and particularly the West Australian economy. And I'd hate to hazard a guess how much of the Western Australian economy is helping out the East Coast when we're, locking down. So with that in mind, let's have a look at this article. Iron ore prices have dropped under US $200 a tonne for the first time since May, as Australia's biggest buyer, China, threatens to reduce its orders while diplomatic relations between the two countries remain frosty. Now, I've noticed that with my Fortescue Metal shares. They've dropped off a bit today. The price of Australia's most valuable export commodity slumped by 3% to $195 a tonne, with concerns China is accelerating measures to reduce its dependency on Australian iron ore. Chinese policymakers have flagged a move to cut its steel outputs in the second half of this year, partly to reduce carbon emissions. But in the near future, it would be very challenging for China to move away from its more than 50% dependence on Australian iron ore, noted Commonwealth Bank's mining and energy economist Vivek Dar. Over the medium term, China could reduce its dependency on Australian iron ore by increasing iron ore imports from other countries, boosting domestic iron ore supply, increasing scrap steel usage, and reducing steel production altogether, he said. The last two measures are likely to happen regardless of Australia-China relations. But China is deeply unhappy with the fact the country has limited options when it comes to iron ore, said Michael Shoebridge, Director of Defence, Strategy and National Security at the Australian Strategic Policy Institute. I think that the Chinese government wants its steel makers to diversify, but that's easier to say and hard to do. They will try and use more domestic steel and iron ore, but the quality and nature of that is just a big cost driver. That is something the companies don't want to do and undercuts their market position. I can imagine the Chinese government trying to force a collective pricing on their steel companies, but they have a real trouble doing that. They've had a real trouble doing that to date, he told news.com.au. I think global iron ore suppliers will keep giving them limited options. Getting Brazil up to scale reliably is very difficult, and even if they are bringing on new African deposits, it can't replace the competitive price and level of volume that Australian miners have. While China will do its best to follow through with the threats to reduce its iron ore orders, it will be hard with the scale of construction still planned in the country, said Mr. Shoebridge. They really resent the dependency and resent the price of iron ore. Well, of course, wouldn't you all? The $200 a ton, it's right up there, guys. It wasn't too long ago we were looking at 50. But when you look at what they're still doing in the scale of urbanization that is still going to happen over the next couple of decades, they are still putting hundreds of millions more people in cities, and cities are based on steel and concrete, and their export engines still require steel too. So they can't get away from needing iron ore, he said. Australia's investment in large-scale production means little escape from China from Australian supply. There is a reason the Treasury puts prices in at US $50 a tonne, as it knows the current price levels can change markedly. But the good news is Australian miners remain profitable even below US $50 a tonne. Mr. Shoebridge called on Australia to shore up its own future and diversify what it does with its iron ore, such as using renewable energy to make clean steel by partnering with countries like the US, the US, Germany, and Japan rather than China. That sounds hard to do, but the more the Chinese government wants to use market access as a weapon, the more other economies will work around it, he said. Climate change is also an opportunity to change the driver of steel, and those sound kind of aspirational, but the speed of technological change and increasing corporate focus on climate change makes these aspirations more realistic. What I would like to see is carbon-neutral steel manufactured in Australia, driven by nuclear energy, mined in Australia. Wouldn't that be, an interesting opportunity? But the challenge is with all of this, with calls for manufacturing, with calls for steel production, with calls for the iron boomerang here in Australia, is do we actually have the will to go through with it? When you've got people willing to travel across the country to protest a coal mine because they don't want the coal to go to India. When, if we have a look, if Australia would reduce all of our CO2, if we would remove it all, cut carbon emissions on the world by 1.3%, what impact would that have on climate change? Nothing. And this is not just some random YouTuber. This is Dr. Alan Finkel. So there you go, everyone. That'd be good to see. But that's my concern, the not in my backyard crowd. It'd be great to see. It's a good aspiration. And I'm sure if you had super funds dedicated to setting that up, people would choose that. Would you? There's a question, and I'll do a quick poll on it today before the Friday review. Would you be willing to have your super invest in, nuclear technology or iron processing here in Australia? And would you be willing to cop that hit for the future of the country? Let me know your thoughts on that one in the poll that I'll set up on the community tab. Take care, everyone. Make sure you join me tonight for our weekly review and live stream on Twitch and the lower quality 720p here on HeiseSays on YouTube. Have a great day. Like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time. Bye for now.